What's up, guys? So I'm going to go over the markets here real quick and a couple ideas that I'm looking at myself, as well as some chart requests that I'm taking from people in the Discord. If you could do me a favor, though, hit that like button, leave a comment below, help me grow this channel as well as the community. And if you're not in the Discord, the link's in the description below. It's completely free for right now. Take advantage of this. I have the growth account challenge in there, separate channel for that, as well as the free trading floor. And I'm not sure how often I'm going to do this, but I'm going to start doing ticker requests if I have extra time. So let's get into the charts. So on ES, an update from yesterday, we have this bearish divergence on the 4 hour. It's also on the daily, where price is making a higher high, indicator is making a lower high. That's correcting right now. You can see it happen today. We sold off most of the day. And right now we're making like a bear flag slash pennant. So you're looking for potential further downside here. But for right now, we're still in a daily uptrend. This is the most important line right now, 52.63. As long as we hold that, we're okay. But it's not looking too pretty right now. Um, Tomorrow, we have to also be aware that we have some things that can impact the markets. So we have job openings at 10 o'clock, the JOLTS job numbers, and a bunch of Fed speakers throughout the day. So we can definitely expect volatility. Right now, the bulls are still holding the 8 exponential on the daily. Ideally, they want this to be the higher low and continue forward. We can't retrace much more because we're getting close to, you know, coming down to our last daily support, and then we can end up chopping around for a while. Like I was saying, though, on the weekend video, that we are in the realm of a pullback, 5%, 10%. So definitely keep that on your mind. Don't overexpose yourself to overnight risk. That's my opinion completely, but I wouldn't be doing it. I'm sitting cash and I'm day trading for right now. Small account challenge obviously is exposed, but even that, I just posted saying that I'm going to pump the brakes on that and just keep putting in cash for when I think opportunity will come. If I'm wrong, I'm wrong. Not a big deal. As you can see on this weekly chart, if we break that daily support, that'll also break the low of this. As you can see on this weekly chart, if we break that daily support, we will also break the low of this weekly candle, which will be notable because we've only done that twice. That was once here, and it was only by like a couple pennies, and then this pullback here. And ever since then, it's always been a higher low than the previous weekly candle. So it'll be definitely notable. And like I said, we're in the time frame, I would say, of a pullback. Doesn't mean it has to happen, but it's pretty likely, I would say, within a couple months we're going to get one. So I'm holding off on any investments. And my plan ultimately is we'll see how far we can pull back. But if we can pull back to this area, like retest this high, or even come back to here, I'm loading the boat with some investments. So I'm not really adding to anything right now at all. I'd rather wait, get the correction that's inevitable, and then capitalize on that. Get cheap price and de-risk a little bit because right now we have higher risk given that this market is on an insane rally lately. So, like I said, though, breaking it down to this 4 hour chart, we're in pretty much a 4 hour bear flag slash pennant that could break to the downside. We're below all the moving averages, so it's not looking pretty at all. Um, with all the market moving activity we have this week too, I said that's just tomorrow. On Wednesday, we also have 4 different Fed speakers as well as Powell, and we have PMI. So this whole week is filled with volatility as far as information. Thursday, we have jobless claims, more Fed speakers throughout the whole day. This could get really crazy, to be honest. So be nimble, fast. I wouldn't overexpose yourself to any trades. There's always another trading day, and we don't have to swing into anything that could pretty much disrupt our whole trade. Going to NQ. This is more at risk as far as losing our daily support. Same kind of thing as the S. So you had our pullback on the 4-hour. We're tightening up. We're on 3 inside bars. That'll break likely before tomorrow morning. So you can see we're just tightening up right here below all the moving averages. Could break down, break our support. And we have this buy zone here that I was looking for, but I'm not sure I'm too crazy about it right now, considering we kind of cooled off going into it. I'd rather us come down in a faster motion, get oversold, and it gives it a little bit more confluence to get a bounce in a short term. So it gives me confidence to play that. But the way this is trading, I'm not sure I want to take that anymore. Keep in mind on the NASDAQ, we're still on an inside bar on the weekly. I mean, it's only one day, but this is going to break. Should get a nice move out of this. I mean, if we break down, we can come back and test this weekly 8. There's nothing wrong with that. It'd be healthy consolidation. As far as the weekly, obviously daily uptrend loss, but it'd be a weekly consolidation and we can continue forward after that. But like I've been saying, we still have to be aware that we have this slight bearish divergence. So if we start to pull back, we have to keep that on the table and watch for upticks in volume, any kind of crazy selling going on. But I was saying to the members today, the selling wasn't too concerning to me at all. You can see it's a little elevated compared to the last few days or last week, but it was going into a holiday week. You can look over here and it's pretty regular. So I was playing the dip here on ES though, but playing the dip for a bounce. Nothing is sticking out as a red flag to me right now. We'd have to see bears really pushing down with high volume to start raising any kind of red flags of concern that this divergence is starting to play out. Could definitely happen with any of these market moving events coming up this week though. So right now, I would say bulls definitely have to hold this low on NQ because they don't have much room. That's really close to your last daily support. And although I said we were looking for like a bear flag slash pennant right now, that's the kind of feel for this. We had our bounce, higher low. Can the hourly bulls get the uptrend going in their favor and try to regain some momentum here? So I'm going to go over some charts right now and stuff that I'm looking at first. Tesla actually did not have a bad day. It dumped initially. I was calling out that this probably wasn't a bad bull setup if it could have held this neckline right here for the inverse head and shoulders. And they dumped it real hard, but they rallied it hard into the end of the day. We're still in a daily uptrend. As you can see here, push up, higher low, higher high, higher low, big upper wick. This actually doesn't look bad at all. So if the market does go bullish, I can see Tesla, pushing forward here. Just in the shorter term. Right now, any Tesla bulls would want to hold that wick as their next low. You can play off that on any bull trades, and I would put a stop right below there. Because on the weekly chart, we're still pretty bearish. But our target for this inverse head and shoulders, if it gets moving here, is much higher. It's right around 200 a share, so you have a lot more upside here. About a 14% move. You have a gap fill, the inverse head and shoulders target, and another gap up here. And we could just negate this bear flag we have going on the weekly. I still have this in the small account challenge. I don't intend on making any ads. Like I said, I'm kind of anticipating the market to pull back within the next couple of weeks / couple of months here. Could be wrong. I'm kind of rolling the dice on that based off of what I've went back and observed in the market off historical overbought conditions, knowing that we're on an insane rally right now. I think it's more likely than not, given that we get a 10% correction 1.1 times per year. So I think it's all adding up to we're probably going to get one before summer. And I want to have cash in a small account for that and my main account because I plan on accumulating a lot of things once we do get a correction and then get cheap price. So Tesla will definitely be one of them. But as far as a trade, this doesn't look too bad. We've been consolidating ever since this top out near the gap. And right now we're in an hourly downtrend. Bulls would need to change that. So this push up here, you'd want to set an hourly higher low and change that trend to get this daily bounce continuation. And ultimately go for that head and shoulders target. That would be the most ideal. Be nice. This would be a really juicy trade if it was. There's a lot of upside with that target. I just have a lot of hesitation with the market itself right now. But we could continue to push for a couple of weeks here. Maybe that's what Tesla does with the market, continues up, hits that target, then the market pulls back. Timing that pullback is going to be a day-by-day thing, basically, as far as the market. We need to change trends. We haven't changed trends. The volume was not standing out in any significant sell pressure to me, so I'd still look to play things bullish until that changes. That can change in a hurry, so just make sure that you're quick to cut any trades if you would have to. I'm not sure if this trend line is going to hold on Tesla, this upper trend line I have here. On the 15-minute, you got a touch there, slight poke above here, slight poke here, a touch there. See if this interacts at all. Like I said, we're looking for an hourly trend change, so maybe we come up here, reject a little bit. You want healthy, like low volume on that pullback, and then bust through. Another way I'm looking at this is that each candle's high is lower than the previous candle. So if we break that pattern, it's not many, but it's 4. And this is the reversal candle. So if we break this high, that should get some kind of bounce. Maybe we set a lower high compared to up here. You know what I mean? But we could definitely get some kind of fall through, I'd imagine. We still have to change that hourly trend first, though. So see what the bulls can do tomorrow. The market's going to dictate pretty much everything. But like I said, this is relative strength. So if the market gets going to the upside, this could actually start to pop. So I'm keeping Tesla on top watch for myself. I'm just going to briefly touch on Smci real fast. So we have our first trading day of the month. We're still overbought. That wick, inside bar on the monthly, obviously. There's no way we're really going to break that the first trading day anyways. Weekly chart, we're still on an inside bar as well. As you can see, we're pulling back. We're still holding that, still holding the 8. We still can bust out of here, but we have a lot of upper wicks, so showing selling pressure. Like I was saying, I was pretty disinterested in trading this, but I did trade it today. I've traded that inside bar bull break to the upside and made some money there, shorted it. I didn't call that one out because I didn't really have a lot of faith in that trade. So the ones I'm calling out in Discord, I have a lot more confidence that it'll play out. But we're rejecting off the 20, and I'm going to load my drawings here in a second. We're still rejecting from that zone. So we came up, smacked into it, rejected out of it, and now we're really tight. So this is where you don't really want to trade because you can get chopped. I would say this could be our line in the sand as far as bears. You definitely want to see this zone hold, but I'm saying they came out, broke into it, sort of like an equilibrium right now. So you got your push up, high, higher low, lower high, looking for a higher low compared to this low. So we could tighten up a little bit and get a break there. I'm not sure I'm going to trade it. We'll see. If it looks like volume's really pouring in and maybe they're going to squeeze the bears, maybe I will play that. I don't know. I wasn't intending on playing it today, but once I saw the volume coming in and knowing we were just looking for a daily higher low, I was like, yeah, I'll play it for a scalp. And I flipped it a little too soon, but it was a good win anyway, so I'm happy with it. Really, if you're looking at this, though, and you want to trade this, you're looking bullish, you want above this wick right here. And ultimately, this zone, push up and break this level, and that should definitely solidify the bull move. And a weekly higher low being set for a weekly push up. Bears, you want this to be your lower high. So you want that wick to hold, that zone to hold, and break this low down here. Like I said, it's going to get choppy, so I probably won't trade this, but I just want to touch base on this because it's still extended and my thoughts on it. So to go over Nvda here real quick, we're ultimately looking for this weekly gap to fill eventually. We have our pullback from right underneath all-time highs. We were looking for a higher low on the daily compared to this low down here. Started pulling back, and we had an inside bar, going into the weekend. Start trading today. Bull break, came up to this zone that I've had drawn out, rejected. Closed below the 8 again. This doesn't really look too good. This could be a potential bear flag right now. We push down, slight push up, break down. Bulls don't want to see that. You're trying to set your daily high or low right on the 20. You had your chance, and bear stepped in, rejected it down. There's still hope, obviously, but bulls don't want to see 891, 23 break. Otherwise, in my eyes, this is a daily trend change. So you bull broke, tried to get the move going, and you're breaking supports again. So you'll also be below the 20 period moving average, the 8, which you're still under right now, but this could start to consolidate longer term. And we'd be looking at a double top scenario. So you have your high there and pretty much touched it there, and rejecting the more pullback that happens and if volume picks up, that's going to give weight to that thesis. You can see since we broke out, we have not closed below it except for here leading into earnings, and that's just a slight break. This would be the first time, so it'd be notable. And like I said, we have this weekly gap below here. That's very likely to fill. So this stock could definitely dictate the direction of the market. Semis don't do too well this month, so there's that as well. And as I showed you, Tesla, this stock is not as strong. Closed near the lows, indecision candle. But we have a lot of market moving activity that's going to be released this week, so who knows really what's going to happen, but that's what I would look at. Like I said, you would want this low to hold or break, depending if you're bullish or bearish. I'm going to go over AMD now. So I haven't covered this stock in any kind of depth, but I start with the monthly chart. I always like to look at big picture first. And you can see we have a large upper wick and a sell candle on this push up. Ideally, ultimately, we're looking for a monthly higher low here. So you have your 8 period moving average moving up right now. So bulls could pull back down to there on a monthly chart, this month or the next, and it'd be still healthy. There's no high volume here, so it's nothing crazy that warrants any kind of longer term caution if you're investing into this. Maybe 20 down here, we're above all the moving averages. This is healthy on the monthly chart. It's still a reversal candle, so we can start to play this out. So on the weekly chart, we pulled back enough, and we have this small bounce to start the week. Obviously, it's only one day, but we have this upper wick here. Any more selling will close below the 8, and this is going to look like a bear flag for further continuation to the downside, which would mean monthly consolidation. I did try to play this long today, but ate a small loss. I saw this down here, and it's like, this could be accumulation, and I tried to play a breakout. I saw earlier in the day all this big bull move, so my idea was to get in on a 5-minute higher low, and I tried to do that and took my loss here. So I saw this candle, I was like, okay, that has to hold. Saw them push up, and they started selling right away, getting close to the 8, and I was like, I'm just done. I'm not going to take a bigger loss than I have to. I don't like the way this is acting right now. I wanted to see momentum kick in, increase bull volume here, something that would show that this was accumulation down here, and we're pushing for a bigger weekly bounce. But right now on the daily, we have an upper wick, still a decent close, like it's halfway through. Stronger than Nvda on the daily anyways. The thing with AMD right now though is we accumulated here for a while, right? And we had our breakout, volume upticked here on that reversal candle, and we've come all the way back into this accumulation. That's why I was thinking that maybe this was going to hold and we'd break out of this again, just to ultimately set a lower high. As it's halfway through this channel here we were in. But really, this is not a good sign for the bulls that we re-entered this channel after having a breakout. Usually when you re-enter stuff like this, you should expect to retest the low of that channel. So on the hourly, we're above all the moving averages. We're in an hourly uptrend, but at the same time, we had enough of a pullback here that it looks like it could chop. So what I'm kind of seeing is an equilibrium potential. So we got our last hourly higher low, pushed up, pulled back to this, but I'm going off this level to be honest. Pushed up, lower high, higher low somewhere, and then maybe a bull break. That's what bulls would want to see. So you ideally want to hold this. You have to hold today's low. That's a must. Get an uptick in volume. So if bears do take that low, that's a red flag. Like I said, you're looking for a weekly bear flag at that point. But that's sort of how I'm looking at it. Bulls want to take out this high, set it a higher low compared to this low down here, and then push on forward. Negate the weekly bear flag. On Microsoft, this stock is really strong. So we had our weekly inside bar break bullish. Indecision candle so far. We're in a daily uptrend, holding above the 8 right now. Bulls want to see further follow through and break above 430.82 and ideally hold this down here, this 419.01. We had tweezers down there. Don't want to see this close below that. We have the 20 period moving average. This is a really bullish stock right now. But we could be just setting up a lower high on the daily and changing the trend. So be mindful of that. This is not a stock I would short by any means. It's one of the strongest stocks in the market. If you go to the shorter term time frames, you can see the price action today. We tried to push up, big upper wick, big lower wick, indecision candle. Set our new hourly higher low at 422.22 and trying to continue this hourly uptrend we have going. We could definitely, chop around here since that was such a big push up here. So you could push up, set a lower high compared to here, and tighten up. Like I've said already, we have enough data coming out this week that's going to impact ultimately the direction of most things, I believe. So right now, that's how I would look at this stock. It's bullish, but I would want this to hold ultimately 422.22, keep the hourly uptrend moving. And then if we lose 419.01, daily uptrend's lost. We're then in a daily downtrend. So TMDX, right now we're looking for a monthly higher low. So zoom out and set our monthly lower high after this push up here. Now we're looking for a monthly higher low. We're holding above the 20 though. So that's good. I know nothing about this company. Just going to go over the chart itself. But with the extent of the pullback, I'd anticipate that this could, just do a weekly lower high and chop or, continue on its monthly consolidation. Going to the daily, you can see we're closing below the 8 exponential. Rejected off the 20 last week. We're trying to find a daily higher low compared to 69.43. I just marked this for now in case it does hold. So we do have a wick. Ideally, if you're a bull, you'd want that to hold. You don't want to give too much back because then it just gives more weight to a lower high being set in neither chop or further downside. So you'd want this to hold on a daily chart. Personally, I don't like this stock bullish at all. You can see we had higher volume here, rejection candle. The most likely scenario here on the hourly is just a lower high. And depending on how much follow through the bulls can get, you want to see increasing bull volume, but compared to this high up here, it's highly unlikely bulls just push straight up. You know what I mean? So they would have to give enough room to then pull back, set an hourly higher low compared to this low right here. And that would be your new daily higher low as well. And change the trend, push up. I don't like this as a bull play. That's my opinion. I think there's better opportunity in other stocks. Looking at Oracle, this is another stock I've never traded before. But on the monthly, it doesn't look bad at all. We're above every moving average. Weekly chart could be doing a weekly bull flag right now. So this looks actually pretty good. We're holding above all the moving averages by a long shot. And you can see volumes tapering off. Last week was pretty low. It's only one trading day, so we'll see. You could look for an entry maybe at the 8 on the weekly. I would say ideally the bulls would want to hold this 123.56, the low after their earnings report. So we have this large gap here, but you can see the 20-period moving average is sloping up. So as time goes on, that's going to coincide with this low here. So that would be a great spot to start to look for a weekly higher low being set for a continuation. I'm not seeing really any red flags here. There was an uptick in volume on this sell candle here, but nothing real significant. Right now, to me, this is just healthy consolidation on a weekly chart and daily, obviously, but we're looking for a weekly higher low. So maybe these next couple of days we can get closer to that low, and your risk is low as far as a stop, and a break below that you just stop out because we could fill this whole gap. That's just an air pocket right now. On Meta, I'm looking at the monthly chart. I didn't look at this over the weekend, but you can see we have a reversal candle right there, large upper wick, and we're pretty far from this 8-period moving average. I don't think we've ever been that far in this chart's history, and we're definitely due for consolidation. We're overbought, so I could see this actually pulling back and touching this weekly 8, healthy monthly consolidation, pull back with the market. It's starting to stack up with some other tickers I'm looking at as far as longer term consolidation or to pull back. I mean, we do have earnings coming up, so that's going to be in a couple weeks. Maybe it's a rally into earnings and then we sell off after that. It's really bullish though. This weekly still holding the 8. It's basically just a bull flag pennant for further continuation for right now. Break out to the upside. I was saying to members as well, another stock I'm looking at that I'm starting to think is, again, adding to this thesis that the market's probably going to pull back in a couple weeks to months, is Amazon. We have this weekly bearish divergence, and you can see going back, we're at our all-time high zone where we had a touch there, here, here, and we traded above it. And that's like the double top from all-time highs. So we're in that zone now, and the reason I'm pointing that out is on the daily chart. The wedge doesn't fit perfect, but the concept is there. So we have touch there, almost touch there, touch here. See, we wicked there, sold the new high, got a new high, sold that one, came up, wicked almost at it, and broke out above it today, sold again. So sellers are definitely up here, but we're still in a weekly, daily uptrend, so nothing to be concerned of. But I'm just looking at this as a puzzle piece to the overall thesis. As just said with Meta, I just looked at that, and to me, we could be entering monthly consolidation sooner rather than later on that one. And I'm just looking at all these things saying this could give weight to the market pulling back relatively soon, as in next couple weeks to months. We'll see though, taking this day by day. Right now, this is an uptrend as well. So that's your line in the sand as far as bulls. You could play this line, I guess, this daily low, but I'd probably go off this one with that large upper wick. You can see since we've entered in this rising wedge-ish pattern, we have had lower volume, decreasing volume except for this uptick right here. So a break below this line could be an indication that that's occurring. The weekly bearish divergence is playing out, and you'd want to see an uptick in volume as far as if you're bearish. Looking over at the marijuana sector, CGC is pulling back on a daily, like I was saying yesterday. We're ultimately just looking for a daily higher low compared to this low down here, 570. We're still above the 8 exponential. And to be honest, this consolidation is not too bad. The volume's nothing to be concerned about. We had a lot higher volume coming in. You want to see decreasing volume and then a continued push upwards. We just had this bearish divergence that had to play out, and we're selling off on lower volume. Again, everything's going to be dictated by what the market itself does. It's going to add sell pressure or buy pressure. But right now, we're just looking for a 4-hour higher low as well. This is where I would keep my attention. And as long as we're above this 20-period moving average, I would look for a break above this high of this 4-hour candle, so 775. That would indicate that the 4-hour higher low is being set, and we'll see what kind of continuation we can get from there. I would say we could anticipate a lower high compared to this with the pullback, but given how this sector is, this could just really squeeze out shorts, to be honest. MSOS, this is a lot stronger than CGC. Like I said, this is an ETF. This is the safer way to trade this sector. Very bullish. Above all the moving averages. We're approaching its previous 52-week high where we did tweezers on the weekly. And our daily uptrend's continuing. So any pullback, we should anticipate a higher low compared to this low down here. And like I said in the video yesterday, this is a sector we should probably keep on watch given that it's election year. Politicians are going to run on this. States will legalize. And that's a catalyst for the sector to really move. So personally, if I was going to invest into something, I would stick with this ETF. You don't have to run the risk of being in the stock that dilutes your shares. So it'll still impact this if it's, in this ETF, but less overnight risk because it's a basket of the stocks. So. But that's pretty much it for tonight. Again, if you wouldn't mind doing me a solid and hitting that like button, leave a comment below. It really helps the channel grow, and ultimately I'm trying to help people. And if you're not in Discord, you're really missing out. I post in here throughout the trading day my entries, exits, theses, and my pre-market setups, what I'm kind of looking at doing throughout the day. And it's completely free for right now, so you have nothing to lose. If you think I'm bullshitting, come check it out. But until next time, I wish you guys the best in the markets.